Most of you would have already seen the article that we wrote last month, just ahead of your 15th of May sign up, about what the right type of structure for you might be. But this webinar is really to cover some more of the practical points, specifically some that will relate to accounting and admin and management. But also, we did ask you beforehand if you'd like to ask in with any questions. A lot of those were to do with VAT and pensions. So because of that, we're going to be covering those points too. So we do have a list of some pre-prepared questions, and at the end, we'll have some time for some additional ones if you do have any. So just as a practical point while you're watching, whether you're on a computer or an iPad, somewhere on your screen, there'll be a button, one that says chat and one that says questions and answers. If you have any questions, please do them through the questions and answers tab. That way, at the end of the webinar, we'll be able to review them on an iPad and answer the questions. So on to the formal questions that we've had in first. So to start with, Jenny, the funding for the PCN is a directed enhanced service. How exactly is the money going to be paid and who will receive that money?
Right, as you know, Katie, every PCN has had to choose a practice to be the nominated practice that's going to receive the funding, and they're going to receive the funding on behalf of all the practices. Now, it is a DES, so it is going to be paid via your open exeter statements. So you may have on the registration form put down your separate PCN bank account, but it won't be paid to that bank account. PCSE can only pay the money to the practice they hold, the bank account they hold for the practice. So the nominated practice is going to receive their statements. They're going to have to go through and identify all the PCN funding and then transfer it to the PCN account. Now, I know, Katie, we have lots of clients that say, we receive some money, we haven't got a clue what it's for. But my understanding is that the nominated practice will receive the PCN codes so that they can identify it from their statements.
And actually, one of my practices I went to see this week, they have been sent their list of codes already, so I have a copy of it. I can only assume that it's a nationwide set of codes, so we can put that on our website.
We put it on our website so that everybody's got them. Because the important thing is you're going to have to go through and identify that funding and transfer it across. The other thing to bear in mind is that although there's only one practice receiving the funding on behalf of everybody, all practices have to sign up to the DES via CQRS, and you've got to sign up by the 30th of June. Now, once you're signed up, you will obviously, the individual practices will receive the network participation DES money, which is the £1.76, and it is based on weighted patient, not registered patient.
And do we know formally at what date they'll take the list size?
I don't know. I'm imagining it might be the 1st of January because I think that's what had to be put down on the registration forms.
So for those of you who are practices, you'll know that, so for example, your QOF, they take the list size at a single date in the year, whereas with your Global Sum, they revise it quarterly. Yeah. So we don't actually know, am I right, at the moment, how the PCNs will work, so we'll have to just see how it goes going forward with the list.
Yeah.
Okay. Second question, what are the funding streams for 1920 that will be paid to the PCN and how will they be claimed for?
Okay, so I think probably most of you do know the funding streams, but just to sort of recap, so you've got the funding for your clinical director. So your PCNs are going to go live on the 1st of July, and the funding for the clinical director will start on the 1st of July and will be paid monthly. You've got, so that's the, it's the 50, so for the, it's only going to be paid for 9 months, so it's about 51 pence per patient that will be paid. You've got, and it is obviously up to, so that's the 9 months. The network payment, so that's the core funding. So this is the £1.50 you're going to be paid. And this will be paid from July because that's when your PCN goes live, but it will be backdated to 1st of April. So you will get the whole £1.50. It won't be prorated. So I imagine that on July, the nominated practice will receive the monthly for the network core funding and a backdated payment for April to June. And then obviously the bulk of the fund is going to be your workforce funding that's going to get paid. So you've got, for the first year, as you know, you've got one clinical pharmacist and one social prescriber. Now your clinical pharmacist is obviously only going to be 70% reimbursed, and the amount of funding that is set for 1920 is the same whether you're a 30,000 PCN or a 70,000 PCN. But going forward, so from April 20, the funding for your workforce will be based on the registered list. Now you can only claim the workforce reimbursement once you've got somebody in place. So you've got to have somebody in place, and you've got to be able to demonstrate that it's an additional role. So Katie, I don't know any practices that have a social prescriber, so I think all of those are going to be new roles. So you've got to demonstrate it, and you are going to have to claim it. So it is going to have to be claimed as soon as you have somebody in post. And then the extended hours DES funding is going to be transferred over from the 1st of July, and that's the £1.45. So I think what's going to happen is it will be paid to the nominated practice, and then obviously that practice will have to pay all the practices in the PCN for providing extended hours, and then eventually extended access will get transferred across.
Great. What name should the PCN bank account be in, and who should be the signatories on the account?
Okay, so your PCN is, if you're a flat or a lead structure, it is an illegal entity. So you're going to have a nominated practice that's going to receive the funding, and the easiest and simplest thing is to have it in that practice name. So it might be the new surgery PCN bank account. Now, in terms of signatories, you're going to have to agree who's going to authorise the payments and who's going to obviously be a signatory on the bank account. It's not going to be practical, Katie, to have every single partner in the PCN being signatories. So if the nominated practice is going to be managing that bank account, it makes sense that it's somebody that they're going to have access to if anything needs to be signed.
Will the PCN be required to prepare a set of accounts?
So the flat and lead structure, as I said, you're not an entity. So there is no requirement for you to prepare a set of accounts and file a return. However, it obviously makes sense for transparency that a set of accounts is prepared. And Katie, we dealt with a lot of the Tower Hamlet networks where, again, they weren't an entity, but we prepared a set of accounts. So you've got a set of accounts that shows the income that's come in for your PCN and then all of the expenses. And one of the things we're suggesting to our PCNs is to use a bookkeeping package called Xero. So what this package is it's a cloud-based package, and then you can have your PCN bank account bank statements being fed into the package. So there's a live bank feed. The beauty with this is that all of your partners in your PCN can have read-only access to Xero. So that will enable anybody at one point to log in and just view what's happening. And you could be working with practices that you haven't worked with closely before. So there's going to be, it's a kind of build up trust and then having the transparency of the finances.
And so presumably any set of accounts that are prepared will be distributed to all the practices.
Absolutely.
It just keeps everything, because obviously the bank account will be in the name of one practice.
Yeah.
It just keeps everything out of that specific practice's accounts. Otherwise, it might be that practice may be in a position where they have to share their actual practice accounts, and that isn't probably a position that lead or nominated practice wants to be in.
Absolutely. And if you're already somebody that's got Xero for your practice, you would have to set up a separate subscription, because you wouldn't want to give read-only access to your practice Xero. Obviously, if some are sort of thinking about setting up companies, a company is a legal entity. So there are legal requirements to prepare company accounts, file them, corporation tax returns. But as I said, there's no legal requirement for a flat or lead structure, but it makes sense that should be prepared.
And just a practical point that's popped into my head, we're going to be preparing these PCN accounts. We would probably say the best year end or period end for them is March.
31st of March, of course.
Some of you watching will think, but hold on, my accounting year end is June, September, December. Will that impact those practices? What will happen?
So I think we're going to cover that in one of the questions, because we're going to talk about how you recognise any surplus, because obviously you have to do accounts to the 31st of March because it's the NHS year end. So we'll talk about later about how you recognise the income in your accounts.
Okay. There seems to be a lot of work for the nominated practice. So from the sounds of it, they're going to have to deal with the claims for the workforce reimbursements, they're going to have to manage the HR, they're going to deal with the payments, and they're going to have to deal with the accounts. How is that going to be funded?
So as I've said, every PCN is going to get some core funding of £1.50 per registered patient. So that is to cover the cost of running your PCN. So you would, if you've got a nominated practice who's going to have to make claims for the workforce reimbursement, they're going to have to look at the statements, identify the funding, make payments, deal with HR, then they need to be reimbursed for their time. So that £1.50 is to cover their time. Now, what I would say is I've had a client I was talking to said to me that their federation, so although the federation couldn't receive any of the funding because they didn't hold the right contract, they actually said that they've offered to basically manage all of the PCN work, and we're going to charge £1 per patient. Right. So I thought, well, 50,000 patient PCN, you're going to pay your Fed £50,000 for doing all this work. Now, if I'm honest, I don't know whether there's going to be a massive amount of work involved and whether that's a good value for money. Or when I first heard it, I thought it was quite expensive, but I don't know.
Year one, it feels that it might be expensive. Yes, by the time we get to year 5, who knows, it might be very cost effective by then. Yes. Wait and see. How should the clinical director be paid? Will they need to be on the payroll, and if so, whose?
Okay, so the clinical director is an interesting one. So remember, if you're a flat or lead structure, you're not an entity, you don't have a payroll. So I would imagine the staff would be employed through the nominated practice. So the clinical director, the nature of the role from a HMRC point of view, I think they could view it as an officer role, and that it should be taxed you should be on the payroll, and tax and national insurance should be deducted. But I think what we've been talking about is that, well, this funding is a DES. So the DES money is coming through to the practice. If, let's say, the clinical director is in the nominated practice, they're going to receive the DES funding. Could that be then just kept aside for that practice? It's paid gross, and it could be prior allocated to the clinical director. You might find practices, the clinical director isn't going to keep the money, it's going to go into the practice's income to cover costs of running, covering the GP being away from the practice. So I think, strictly speaking, I think HMRC would say it's an officer post for PAYE, but I think there may be ways that some of this could be paid gross, but it's something we're still sort of looking into and looking at.
Yeah, and so as a reminder, the full amount that will come in, you know better the figures, 30,000 for the clinical director.
Yeah, so 36. If you've got a 50,000, it's going to be about 34,000 that's going to come in.
And remember, that money that comes in, if it is a salary, if it's on a payroll, that amount in theory has to cover tax and national insurance
and pension
and
pension. So of course, if you're going to pay it net of tax and pension, then the clinical director is obviously going to get less than that.
Indeed. If there is a surplus or a profit in the PCN, how should that be taxed?
Okay, so I think this was your question that we were talking about earlier. So your PCN isn't a legal entity, but you may make a surplus. You may make a surplus because the cost of running your PCN have been less than the £1.50. Now, the DES specification is very clear that it says the money, it's a DES, it's a gross payment for tax and pension purposes. So if your PCN makes a surplus, then in theory, all of that income and expenses should go into each practice's set of accounts, just like your DES money for your flu. But I think one of the things we're talking about is the practicality. It makes sense for your PCN to be a 31st of March year end, but within your PCN, you're going to have practices with a March year end, June year end, September year end. How are you going to recognise any surplus into their accounts? And I think when we dealt with the Tower Hamlet networks, it was recognised when it was paid. So if you make a surplus and it's paid out, that would be when it would get included into your practice accounts. Obviously, if you're a company, then you're going to pay corporation tax on those profits because you are an actual entity.
And in a similar way, practice would be taxed on a dividend, whatever it would be called, when it was paid out from a company.
If the company paid out the dividend. So it is taxable and it is pensionable. So you would have to pay pension contributions on it.
What happens to the funding if a member GP practice gives back their contract or, say, merges with another GP practice within the PCN or outside of the PCN?
So you've got to bear in mind that some of your payments that are going to be paid to you are list-based. So the workforce reimbursement is not list-based for 1920, but going forward it will be. So if there is a change, so if, I don't know, let's say one practice decides they're going to merge with another practice in a different PCN, so they're going to leave your PCN, any changes to the members of the PCN have to be agreed, so you have to inform the CCG, NHS, to say that there is a change, but the funding will change. So if you're list-based, funding will change if the PCN list goes down. And Katie, one of the other things that I think we've been talking about is these payments are list-based payments. So I think they're going to take the payments based on your list on the 1st of July, but practices, your core funding gets reviewed, so your global sum gets revised every quarter for changes in your list. If you're a PCN where your practices their list size are growing because there's growth in housing, I'm not sure when the list would be reviewed. I don't know whether they're going to review it yearly or whether it will be reviewed quarterly like the global sum is. So I don't know that, but obviously you've got to bear in mind that, if list size changes, then the funding will change.
And I think these are practical points that have been raised at NHS England, as in the question of when it will be, when the list will be recorded or revised. We just haven't had any formal information yet, but of course as soon as we know, like with all of these points to do with the PCNs, the more information we know, the more we're going to distribute.
And I think if anybody does know that answer, then let us know, because we still
Q&A.
don't know.
Yeah, as a practical point throughout this, if we do say something and you actually know the answer because you yourselves as a nominated practice or lead practice, just pop it in the Q&A bit, say it's an answer, and then at least we can read it out at the end and let everyone know. And
just if anybody's joined late, just to say that you can ask questions as we go through, but can you click on the Q&A icon as opposed to the chat icon, just because we can't see it through the chat.
Okay, so we know that some federations will be receiving the DES funding as they hold either a GMS, a PMS or an APMS contract. Is there anything practices need to be aware of?
So I think some of my practices have said to me, so I've had clients that phone me up and they've said, we don't have to choose a nominated practice, our federation is going to receive the funding because they hold a GMS contract, they're going to employ the staff, and they're like, great, we don't have to worry too much about it. But remember, it's the practices that are signing up to the DES. It is your responsibility to deliver the DES. So you might have your federation dealing with it all and managing it all, but it's still your responsibility to make sure the workforce roles are filled and the DES is delivered.
As mentioned, we've already written an article which can be found on our website which considers the different PCN structures. However, there's still a lack of understanding regarding the VAT issue. Can you please explain what PCNs and really practices need to be aware of?
Yeah, so VAT. So I think when we all started to kind of understand what was going on with PCNs, everybody's talking about the VAT issue. Now, most practices, you've never had to worry about VAT because you are exempt. You're classed as exempt services. What you provide is all about protecting, maintaining and restoring the health of an individual. So that comes under the VAT exemption for medical services. Obviously, there are dispensing practices that have had to register for VAT. So you've never had to worry about it, and you wouldn't want to worry about it. But the issue with PCNs is there a supply of staff? So a supply of staff is a standard rate for VAT. So if one person is supplying staff to another person, VAT has to be charged. So I know we had some practices where their locum agency, I think they had investigation, and then they had to add VAT onto the locums they were supplying to all of the practices. So just to give you some examples with the PCN and how this structure would work is, let's say you've got practice A is your nominated practice. So they're going to receive all the funding on behalf of the PCN. Now let's say practice B and C are going to use a clinical pharmacist because the others have got clinical pharmacists, they don't want to use it. So practice, you've got a shortfall of 30% on your clinical pharmacist funding. So the nominated practice, practice A, on behalf of the PCN, will invoice practice B and C for that shortfall. Now, has practice A supplied, the issue here is practice A supplying staff for practice B and C? And it's also about who is directing and controlling that person. So if practice B tells clinical pharmacists what to do, then there is an element of supply of staff. And VAT would have to be added on if the supply of staff was above 85,000. Now, I think first year, your 30% shortfall on your clinical pharmacist funding is way below the VAT threshold of 85,000. So if it's just movement of money between the practices within your PCN, then for the first year, VAT is not going to be an issue. Some PCNs have expressed an interest in setting up a company, and again, if that company can't receive the funding, then if nominated practice A, so let's say the company employs the staff and then practice A transfers the money to the company, again, is the company actually supplying staff to all the practices, and that payment is for supply of staff. What I would say with the VAT, so we work with a VAT consultant who has been specialising in healthcare for 25 years, and he said that he's happy to look at people's structures just to make sure that they're, just to look at the VAT problems. But in the first year, I think it's unlikely that that will be an issue.
So moving on, is there a way around the VAT issue, and can PCNs eradicate it altogether?
So there's a couple of things that you can look at doing, but of course with anything, there's also other issues to think about. So you can look at shared employment contracts. So the flat structure actually talks about having shared employment contracts between all the practices. So it does mean what you're saying is you've employed a clinical pharmacist, but they are working at all these different practices. So if you've got a shared employment contract, any movement of money between the practices for that clinical pharmacist would be exempt. But with shared employment contracts, one, they've got to be watertight, and second, for the NHS pensions, there is an issue that the pension agency is saying, well, if you've got somebody that works at 6 practices, you should have 6 NHS pension records for them. So I could see that being an administrative nightmare. So that's one option, and certainly the flat structure talks about shared employment contracts, and that's why it says VAT isn't a problem. The other option there is what's called a VAT cost sharing group. So what this is your PCN would set up a separate company. So they'd have a separate limited company, and then all of the practices in the PCN would be members of that company. The company would employ the staff, and then if you've agreed a VAT cost sharing group with HMRC, then any movement of money would be exempt from VAT, because all the company's doing is you're saying, we're just sharing this cost. The staff cost us 100,000, we're putting the money into the company to cover that cost. So that would be exempt. Having said that, the cost sharing company cannot make a surplus. It can't make a profit, because then it's not a cost sharing group. It's not about sharing costs.
So this wouldn't be a situation where you would be paying the DES money in. You wouldn't want to do that. You need to keep that separate. So what would end up happening in theory is that you would have a small set of accounts, well, you'd have a company set of accounts prepared for the cost sharing group limited company, and then you'd have another almost mini income and expenditure set of accounts for the PCN DES monies, which would be distributed. So you'd have additional administration. So this, I'd say with the cost sharing, it's definitely one to consider. And again, going back to the one of the previous questions, if there's a change in members, that could
impact on the VAT cost sharing group. Now, what one of my clients did say to me is, because everyone's talking about the VAT issue, is they said to me that NHS are already talking to HMRC about this issue. So maybe rules will change. And when I was talking to our VAT consultant, one of his partners deals with schools, and he said when they introduced academies, there was a difference with the VAT and there was a problem. And actually what happened was they changed the rules. So in an ideal world, watch this space and let's see what happens.
What about the NHS pensions? Are there any issues that PCNs need to be aware of?
So obviously, to be able to join the NHS pension scheme, you have to obviously be an NHS employment contract. So all GP practices, any staff that join them can be on the NHS pension scheme. However, if you set a company, so let's say VAT is going to be a problem and you go down the route of setting up a VAT cost sharing group, you've got a company that isn't an NHS employing authority. So all of those staff that would be employed wouldn't be able to be part of the NHS pension scheme. And that could be important. You know, some of these roles, some of my clients are saying, well, there's not enough people to fill these roles. Well, if you're trying to sort of, you know, you interview somebody, but actually the PCN down the road isn't a company they can offer the pension scheme and you can't, that might affect the decisions that some of these staff choose. So yeah, but the other thing as well, Katie, we were talking to contact we have at the NHS Pension Agency, and they've already said that they've been asked to look at the policy, because their intention is that all of the workforce roles that are within the PCN, they should be able to access the pension scheme. But of course, policy takes a while to change. So it may well be that something will change and people can be part of the pension scheme. So again, watch this space.
Yeah. So from the sounds of it, a company seems to add a lot of complexity. So why would a PCN want to set up a company at all?
So I think the clients that I've spoken to that want a company, it's all about being able to limit the liabilities. So your biggest liability is obviously your staff costs. Within a company, if you have, let's say you've got a company, there's only £5,000 in the bank account, that's all that there is. But I don't know, an employee makes a claim against you and you've got to pay out £20,000. Well, if it's within a company, if they've only got £5,000 in there, they could only pay out £5,000. The practices or the shareholders of the company wouldn't be required to put in money. It's limited liability. Whereas if you've got a flat structure, then all of the practices would have to share that liability. And obviously your PCN agreements need to cover how those liabilities are going to be dealt with. Just to mention is the lead structure. When you read the guidance about the lead structure, it talks about the lead practice as having all the is taking on the liabilities of all of that staff. Well, I wouldn't want to be a lead practice that suddenly is liable for a whole group of staff that if in 5 years' time PCN funding is not available, you're left with staff that you may or may not want.
Yeah. So although most of you will probably have already decided on your structure, is there any advice that RBP can give regarding structures to PCNs?
I think we're saying you've got to keep it simple. I think for this year, keep it simple, because I think there may be changes with VAT, there may be changes with the NHS pensions. So I think keep it simple for the first year. VAT isn't going to be an issue for sort of the flat and lead structures, because the top-up payment that you need is not near that threshold. So keep it simple. I think you will be able to review and change your structure. So again, with some of our Tower Hamlet networks we dealt with, they were just loose associations like this, and then some of them went down the route and they became a company later. So I think for the first year, it's best just to keep things as simple as possible.
Although we're not solicitors and we can't give formal legal advice, what advice can we give to PCNs regarding the network agreement?
Okay, so what I understand is that there's lots of blank templates out there for the network agreements, and all I would say is there's templates with lots of blanks in them that have to be filled. Now, my advice would be you need to speak to medical specialist solicitors, because in my mind, this PCN agreement is just as important as your partnership agreements. So you wouldn't write your partnership agreement without taking legal advice. So I would be saying PCN agreements, you need to get advice on, because there's lots of things that need to be covered. You know, how you're going to share liabilities, you know, all sorts of things that need to be covered. So I would definitely be saying get advice. The other thing to bear in mind is, once your PCN agreement is signed and agreed, you do have to confirm to CCG NHS England that it's all been agreed, and that has to be done by the 30th of June. If you don't do that by then, because you're still discussing it, you haven't agreed it, your PCN doesn't go live on the 1st of July. So it's really important that you confirm that all the practices confirm that the PCN agreement is signed and agreed. And I think, Katie, we were talking to a couple of medical solicitors who said, I think what they're charging for PCN agreement was about £2,000 plus VAT. So again, your pot of £1.50 that you're getting for your PCN is to cover such costs as a few PCN agreements.
And just something to think about, I know we're constantly saying during this how we know there's going to be changes, we know things are going to evolve. If that is the case, then there's no reason why your current network agreement can't stay in place, and you maybe do an addendum or you just do an amendment. they're the kind of things you would have seen, you know, individuals watching who have added a partner's retired.
Yeah.
You know, you don't have to go through the whole process again. It's just an adjustment.
Absolutely, because I think your PCNs are going to grow and evolve over time. So yeah, no, absolutely, it's going to be probably something that will have to be reviewed as PCNs develop.
And although this is an illegal point, this is more of an HR point, going back to talking about the shared contracts or employment contracts, again, like you would take out accountancy or legal advice, definitely speak to HR consultants. There are those obviously who deal within the medical field as well, because they will be able to help assist you with your shared employment contract than just downloading a standard template, which might not be practical, especially for the NHS pension. That's might be.
And the other thing that we talked about here, that's been sort of brought to our attention, is that you're going to need your PCN agreement. It's got to be careful that you're not seen. So as I keep saying, your PCNs, if they're a flat or lead structure, then you're not an entity. What you've got to be careful of is that they can't be seen to be a partnership at will, because if they could be seen to be a partnership, then you should be filing a partnership tax return. Now, if in 4 years down the line, HMRC say, you know what, this is a partnership, you should have filed a partnership tax return. So you'd have late partnership tax returns. That's not £100 penalty for one return. It's £100 penalty for every single partner in your PCN. So again, just need to be careful with the agreement. So our advice is take some proper legal advice on them.
So we are at our final sort of pre-prepared or already emailed in questions. So I'm just going to read that, and then after that we will go on to looking at the questions that you've been writing in, and I've had a thumbs up to say that there have been a couple coming in, so that's good. So Jenny, what do you think the future of PCNs will be?
Okay, Katie, if I had a crystal ball and I knew the future, I really wouldn't be sitting here. But anyway, so what do I think? I think there's been lots of talk about, you know, the size of practices. You know, the NHS wants to be working with bigger organisations, and there's all this talk about 30 to 50,000 list. Now, we know we've dealt with lots of mergers that some happen, some don't. And normally the ones where they're being forced into merge don't work and they end up splitting later. So there's a part of me that thinks, well, the kind of practices merging hasn't really worked. Is this going to be a way that they are going to try and force practices into eventually merging? You know, it's all about working closely together. I also wonder whether, you know, it's a DES, extended hours has gone into it, extended access. Are we going to see more DES money go into your PCN? Could your PCN be responsible for delivering flu vaccinations? So it does make you wonder whether, you know, is that the motive? And I also just saw actually earlier today on one of the medical magazines that 2 small PCNs have been forced to becoming one PCN. So they don't want to be, but they're 2 30,000 PCNs that are being forced to basically become one. So I don't know. And also in 5 years' time, Katie, PCNs, they could decide, you know what, this hasn't worked, and we're going to do away with the funding for PCNs. So nothing in the NHS stands still. So it's kind of watch this space.
Exactly. So we'll go now to the questions. So thank you to everyone who has already written in. If you've still got questions, please do put them through, because they'll just come up live as we're looking through them.
Okay, so first question I've had is, as a federation, I don't currently receive monies through Open Exeter. Do I need to set this up, as we're going to be receiving the PCN funding, and how do I go about doing this?
I want to say something quickly, as soon as it's just popped into my head. I went to see a practice this week, and they received some I don't know how, but they received some PCN monies not on their NHS Exeter statement, via the sort of remittance statements that you receive. It was just 2 lines. They were both very clearly designated with the letters PCN. They also had a code.
Yep.
So it could be that as a federation, you will just receive your money the way through the remittance.
The first thing that sort of came to my mind with this question is, I'm assuming the federation holds a primary care contract with a registered list, because what we're saying is, to receive the DES money, you have to have a GMS, PMS or APMS contract. So however that funding flows through to you, I would imagine is how the PCN funding, because it is a DES payment. So that's my thought on that one. So the next question we've got is, what if a clinical director is a partner? They cannot be paid via the payroll. Is there any other way? So this is where, I think this is why we're kind of sort of a bit, you know, it's a bit of a grey, because I think if you're the nominated practice and your clinical director is a partner, I think it could be paid gross. If you are a partner in another practice, the question is, can it be paid gross, or does it have to be on the payroll? So
we don't actually know.
Yeah,
that's why we said earlier, we know that it should be deemed to be an officer role, and an officer role should be on a payroll. However, the nature of the funding, and I think definitely if you are the nominated practice and you are one of the partners, I can think of one I know of, then that partner will just have a prior allocation, and the gross will be treated through the accounts.
Yeah. I think, So I think there may be way, because it's a question of are you employed, and the nature of the role. Because if your practice is, if you're not the nominated practice and you're in a different practice, if they invoice for their time, it's one we're still, I think we're still sort of trying to just look into, and so I think once we are confident with what the correct position is, then I think we will put something on our website. So the next question, our clinical director role, our PCN has 2 job sharing clinical directors, as their PCN size is 81,000. We were thinking that they would both be self-employed consultants rather than on the nominated practice payroll. Any advice? I think it is. Employment status has always been a very, grey area, and because the nature of the clinical director, HMRC could view as an officer. I know Anu's senior tax manager, he sort of had implied that it could be paid gross. So it's just, so I think that's the same as the other question. Extended hours, Des. If one of our practices does not agree to remain open during all core hours, so half-day closures, and hence not be entitled to the extended hours, Des. One of our practices doesn't agree. They just saying what happens. Yeah, I think it's what happens. So it was interesting because very early on when PCNs got announced, I was talking to one of my practices, and he said to me that the extended hours DES money would still get paid to practices, and the practices not doing the extended hours, the PCN would have to recover the money. So the PCN is responsible for delivering extended hours. So I'm assuming that you would be required to offer that practice who's not doing it extended hours cover. But they just wouldn't get any of that money, and it would be distributed and paid to the practices that are doing it
accordingly, and that would be at the discretion, I guess, of whoever's in charge of managing the PCN monies.
And I think again that could be something that needs to be covered, in your agreements. So the next question: do we need to seek legal advice regarding PCN formation and the network agreement? Okay, so this I think came in before we actually had covered that question. So I think, as we've said, our advice to you is definitely to get legal advice. The next question: is this PCN going to be approved if one practice decides to remain closed for half a day a week? Will this PCN be entitled to provide the extended hours? So it's again around extended hours, and that one practice may say still closing for half a day, and they're not going to change their way about it. My understanding is the PCN is responsible for delivering the extended hours. So I suppose if one practice isn't doing it, you would have to offer for those patients to be seen and covered elsewhere. That's my thoughts. Don't know whether you.
I guess if one practice, it would be the difficulty will lies if one practice. They practice A, B, and C. Practice A decides not to do it. Practice B is going to see practice A's patients. They'll receive the funding for their number of patients. That's going to be easy to calculate. However, what if B and C both decide to be open? How are you going to decide who's seen whose patients? How is it going to be quantified? So this is what, and again, this is more of a legal type issue because it will come up in your network agreement, and I'm sure this is probably built in. The solicitors have already thought of this.
And I think your PCN is responsible for delivering extended hours. So if the current practices don't want to do it, then to receive all of that funding, other practices may have to cover those appointments. And I imagine that if the PCN is receiving the £1.45, you're only going to pay it. And what I think is the money will come in, and then it should be paid to the practices that are doing the extended hours based on their list size, because that's how you would have received the money before. So VAT and supply of staff, PCN is a flat structure, but what we are planning on doing is not going with shared employment contracts, as there are concerns with governance and pensions. We are having two practices in year one, with PCN employing clinical pharmacists for themselves with separate employment contracts. So as I've said, I think year one VAT, so at the moment, without the shared employment contract, if the supply of staff was more than 85,000, VAT is an issue. However, for year one, for now the year we're in, the top up, the shortfall isn't more than the VAT threshold. So VAT won't be an issue for you in year one, but I think we've got to watch the space, because I think there will be, well, I don't know, but there may be things that will change. If we have a cost-sharing company for employment and pension purposes, will it cause problems with continuity of employment with the NHS pensions? So I think I mentioned, if you've got a cost-sharing company, this is going to be a separate entity. You can't be part of the NHS pension scheme because your company doesn't hold an NHS contract. So if you have to go down the route and set that up, at the moment, with the rules that they wouldn't be able to be part of the NHS pension scheme. So it's only going to be staff that are employed by practices that will be able to join the pension scheme. This is an interesting one. How do we cover the indemnity for professionals employed using a joint contract? That is interesting.
How do we
cover the indemnity? So when you take out insurance for, say, your nurses, now I wonder whether if the nominated practice that's receiving the funding is putting the staff on their payroll, then I wonder whether, and I don't know, so I wonder whether you then add that person onto your indemnity, but obviously the cost of that would have to come from the PCN. But that's a really good question that I think it's probably more of an HR question.
Yeah. So for those of you, I know I have multiple practices, you have sort of a monthly subscription with an HR company. These are the kind of questions to be putting their way, especially those of you who use the medical specialist ones.
I just raised my eyebrows at this one. Our PCN is 225,000 list. What size are others? Well,
you're officially our largest.
Yeah. So, I mean, one of what I thought was our largest was about 120,000 patients.
I think I know.
Okay. So I think most, although actually one I've just taken on this morning, they were about 77,000 patients. Yeah, I think I've not spoken to anybody that's got a PCN as large as that. So lots of £1.50 payments coming your way. Okay, we are considering transferring all the DES money to the limited company. So when this is all the DES money, I'm assuming this is all the PCN funding that is going to come through. So again, I think the issue with this is VAT, because you're basically saying we're going to set up a separate company. The company is going to employ the staff, but that company cannot receive the funding direct. So the nominated practice is going to receive the funding and transfer it. Well, is some of that funding actually about supplying staff? Because the company is supplying staff to all the practices. All I would say to you is maybe speak to, it's one of my clients, so speak to me, because it may be that we just need to put you in touch with our VAT consultant just to review that structure. We are a flat practice network. If all our practices are pooling in some money into our joint account to keep as a reserve, how do we declare this in our individual accounts? This would be so you've put money into your PCN, so you paid money out, it would just be a loan to PCN. Yeah. So some of the federations, when they got set up, you bought share capital and some of it was a loan that you could get back. So it is, in your practice account, it would just be loan to PCN, and then when there's funds in there, it could get paid back to you.
Actually, we hadn't mentioned this earlier, but we were talking about it just as conversation. For that practice, for the practices who are watching, who are the nominated practice, of course, there will always be a timing with your when you prepare your practice accounts. So at the end of the year in your formal practice accounts, there will probably be a line showing money due to the PCN account or money due from the PCN account, depending on what the time is. But that shouldn't affect the partners in the practice or the partners in the PCN. Yeah. It's just sort of a balancing act that the accountants do at the year end. So there'll always be a line in the accounts to identify the money, because of course it is actually coming into the bank, but it won't be taxed or treated.
Because I was going to say, some clients in the nominated practice have been worried that all that money coming in is going to be in their accounts and they're going to pay tax, and it will, no, you're not. It will come in and it will be transferred to your PCN account. Is the £1.50 network funding for running a network recurrent funding? Yes, as far as I'm aware, the £1.50 is your core funding for your PCN, so you'll get it 1920 and going forwards. I don't know, that's
the only one I know that isn't is the sign up.
The £1.76. So that's the £1.76 network participation money. Okay. If you employ your pharmacist through the federation, how does this affect VAT shared agreements? So I'm assuming with this one that your federation is not going to receive the DES money direct, so they don't have the right contract to receive the funding. So, and I'm making the assumption that practice A is going to receive all the funding, but your federation is going to employ that person. So again, if funding is then transferred, it's whether your federation is actually providing medical services or whether they're providing a supply of staff. Clinical director pot of money is being shared out between clinical director and management roles, i.e. not to the one individual, more like a backfill for the hours put in by the various network partners. Are there any implications? So actually this one, it sounds like to me, Katie, that they're saying the kind of £1.50 in your pot of money you're going to get for the clinical director, it's just going to be seen as one pot to pay the clinical director's time and management. I haven't read anything specific that says it has to be allocated to a single individual. No, and that's interesting.
Potentially we'd have to double check that.
Yeah, and that's interesting because that might get around the whole
gross, not gross.
Yeah, because actually what you're saying is we've got this pot, but it's just a pot of money because the funding is a DES. So that actually, sorry.
I've never asked that. That's a very good question.
That's a really, really good question. Would you recommend setting up a separate company by shares or guarantee? So I think this is dependent on, are we talking about a back cost sharing group, or are we just talking about a separate company? Because obviously a company with shares by guarantee, you're basically not saying that it's not for profit. Whereas if you're going to set up a company further on for your PCN that's going to make profit, then you want it to be a company by shares. I am doing management work for PCN, but work for lead practice. How do you recommend I get paid for PCN work to avoid VAT implications? So I'm doing work. So I'm assuming that this person is not the nominated practice. So they're just doing work. I think, and I don't know whether this is a GP or, I don't know whether you're a GP or a practice manager. So it's just talking about, I'm doing management work for PCN for the lead practice. How am I going to get paid? So there's not, in my mind, correct me if I'm wrong, there's not a supply of staff because you're just working in another practice. So if you're the practice manager in another practice, the nominated practice is just going to use that £1.50 to pay you for your time. Yeah, administrative work. What I would say is administrative work is normally if you're sharing, so one practice employs admin staff and then invoicing the other practices for that cost, that's the supply of staff. Are practices obliged to surrender their 45p global sum if they refuse to do the extended hours? Yeah, I don't know, because somebody I spoke to right at the beginning said to me, because I said I thought the extended hours funding would go to the PCN, but they said to me, no, it's going to go to individual practices and it would be the PCN to recover it. I actually don't know. So I don't know if, I mean, of course, if they're not doing it, they shouldn't receive funding for it.
The only thing I can think is we don't know. However, if you are a practice and you've received your 45p and you know you're not doing it, I would probably be putting that funding aside just in case they claw it back, because NHS England could claw it back through your exit statements. So just to be aware, we just don't know how it's going to work, but there is a possibility that that could happen. So if you are receiving funding, knowing full well you're absolutely not doing it, just put it aside in case they claw it back.
You shouldn't be. And I was going to say, there's another one about the extended hours funding. Can they still claim the rest of the DES money? So, yeah, I think it's just that the PCN is responsible for the extended hours. And really, if a practice is not doing it, you're just not going to get paid a share of that funding, as long as another practice, I think, is sort of obviously offering extended hours for those patients. Because your PCN is about you delivering these services for all your patients in your PCN group. So you don't want to leave out a group of patients just because that practice has decided not to. Doesn't the VAT threshold also include other income such as private medicals? Yeah, I mean, so the 85,000 limit is the VAT threshold. So if nominated practice A that's receiving the funding invoices those practices, I use example B and C for supply of staff, if you've then got to add on your VAT medicals that aren't exempt, anything else that you're receiving that isn't VAT, that's when you'd have to look at the 85,000 in total. So it is the practice that's going to receive that reimbursement for the supply of staff.
Just to check on the time, we've got about 5 minutes left, so we've probably got enough time for 2 or 3 more questions. And just while Jenny's reviewing the last couple of questions, what I'll just say is that after this webinar, it's going to be, I believe, put on our website for those of you who joined late or just want to watch it again or share it with anybody. But also, we beforehand put together a PowerPoint PDF pack of just the questions and answers that we had pre-prepared. So they're only bullet point, they're sort of more notes, but if you do want them, we can share those with you. All you need to do is email info@rbpca.co.uk or just contact your partner at RBP, that's no problem. We can also share with you the names of our lawyers that we would recommend that you could get in contact with, specifically to do with your network agreement. There are some that we know have dealt with the network agreements and feel confident preparing a watertight agreement for you.
Yeah, and just a couple of, there's actually not too many questions left, so I'll just do a couple of them. We are getting £1.50 per patient. What is the £1.76 sign up? So that £1.76 is for every practice that takes part in the PCN. You're going to get £1.76 per weighted patient.
It's just going to go straight into your practice, and it's just declared in your practice accounts. It's just sort of a one-off lump sum that's going to come in.
And then another question that we asked is, if we set up a cost-sharing company for shared employment purposes, do we have to do yearly audited accounts and publish them? So if you have a limited company, there's a requirement to do limited company accounts. There also have to be filed with Companies House. It does mean they are published and anybody can have access to those accounts. So yeah, if you've got a limited company, there is a requirement to do accounts, whereas your flat and lead structures, there isn't. One of the last ones we've got is, if we have a subscription to a HR company, can this be shared under the cost sharing company, or would this be better shared under the PCN accounts? I think that's probably a question for your HR company, because I think you're saying, we've got one policy, can we cover the PCN HR? Which you would, I suppose, if you're a flat or lead structure, because you've not got a separate entity. But if you're a company, it is a separate entity. Probably your HR company are going to charge you another fee, possibly one for them.
Do you have any more?
Yeah, so there was just another one, NHS release update on CNSGP scope of the 12th of June, BPCN workforce, and whether they are covered under the state indemnity scheme. Because I think the state indemnity is supposed to be covering all healthcare professionals, but I don't know for definite whether they're going to cover these new workforce roles.
We just haven't been provided with such detail at this stage. So I think we'll leave it there. So thank you everyone who's tuned in, and hopefully you've enjoyed it and it's been informative. Please look out for more information about our future webinars. We're hoping to do one later in the summer. So as I said, if you do want any of the information that we've talked about, please just email in info@rbpca.co.uk or your relevant partner here. So thank you to Jenny, and enjoy the rest of your day.
Thank you.
Bye.